This week, global leaders, policymakers, and executives are meeting in Davos for the World Economic Forum. And as always, markets are reacting to the tone of those conversations. What we're seeing now is volatility driven less by the fundamentals of markets and more by the narrative and uncertainty. That kind of noise is not new. We saw something very similar in April of 2025 when Liberation Day under the Trump administration spooked markets. I was actually at a conference with Bloomberg Markets when the headlines came through, and the sentiment was kind of emotional and almost threw some of those conversations across panels off of their planned course. Across markets, many investors stepped aside out of fear, but those who stayed invested were rewarded. By the end of the year, the S&P 500 delivered roughly a 37% return from April's downfall to December's close, and that lesson there is important. Today's conversations are no different. The underlying fundamentals of U.S. capitalism have not suddenly broken, and corporate earnings, innovation, and productivity and capital markets remain intact. What has changed is the level of uncertainty, and that uncertainty tends to push uninformed investors through speculation rather than discipline. In every cycle, there are voices that misunderstand market dynamics and interpret policy shifts as the end of the system itself. History shows us that markets don't reward this emotion. They reward patience, capital allocation, and long-term participation. Discussions around global blocks like BRICS are not new. They've been around for years, and what is different is that the United States is being more explicit about protecting its economic interest. While that can create short-term volatility, it's often constructive for the U.S. economy over the long run. Markets don't move in straight lines, and we need to recognize that, and they don't respond well to panic. The real risk is allowing noise to push you out of a system that has consistently rewarded disciplined investors over time.